Morning, good afternoon, and good evening to all. Myself Vaibhav. In today's session of automated trading, we will be try to complete our tricks setup on which we started working last week. Today is the Monday and a fresh start to this our session. This is a tricks indicator. I hope by now you are well familiar with the functionalities. It is fairly simple. It simply tries to measure the rate of change of the triple exponential moving average, and we are using it as a oscillator and momentum indicator. Then the ATR for optimizing purpose, we will be utilizing this for placing the stop loss and target levels. Before we get started, here is the standard disclaimer for the day. I would like to remind that this session is simply for the tutorial purpose and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. Suppose if you want to use any of it, I would recommend that you do extensive trial runs for good enough time to get an idea of the efficacy of the algorithm. And nothing in the webinar is to be constructed as an advice to trade or for any particular trading setup. On that note, we get started for the day. We have finished our buy side, so now today is the time to look at when we will be going in for a sell trade. So here, for a sell trade, the requirement is that on the hourly time frame, the TRIX indicator should be in a negative territory. The value should be below zero and it should be falling. That means the negative values are falling further, and as long as this condition is in place, our algorithm will keep searching for the trade on the short sale side. So here, as you can notice that the TRIX value keeps falling till 11 GMT of 25th May, and from there onward it flattens and then start to rise, and at that point in time our algorithm will no longer be looking for the sell trade, and here the short sale opportunity window is between 14 GMT of 22nd May to this 11 GMT of 25th May, and then the trend reversal happens as you can notice, and the TRIX starts to rise. So here for us the selling opportunity won't be that long, and I think if we want to look for a bigger opportunity window, then we will need to go back in time. But in recent days, for past couple of sessions, the Euro USD has been consolidating with upward bias, and because of that, not many short selling opportunities were there. But still, as you can notice, on 14th of May, we had this change in momentum and it entered into a negative territory, and that lasted even here also less than 24 hours, but still it has been a couple of occasions when we had the short selling opportunity, and this here it had lasted for extended time, almost 2 days. So those are the opportunities which our algorithm will try to exploit. Now, suppose if this hourly condition is in place, then we shift our attention on the 5 minutes time frame, and on the 5 minutes time frame, the requirement is that let us assume that hourly condition is in place. Then we need the TRIX values. We will be basically focusing on the TRIX value of last 5 minutes candle close, then 20 minutes back, and then 35 minutes back, for which we are looking you look back period of 1, 4 and 7 respectively. And in all these three instances, the TRIX value should be more than 0. That means the TRIX on the 5 minute time frame is in positive territory, and then it was rising, then it starts to falling, and only when the TRIX value starts to go down after being in the positive territory for considerable time, and then we will be looking for the short sale opportunity. So as and when this change happens, when the current value the value of last 5 minutes candle actually starts to go down compared to the value 20 minutes back, then we will be initiating the short sale, and then at that point in time the value 20 minutes back should have been higher than the value 35 minutes back. So we will be looking at the combination of these three blocks, and then depending on our requirement, only when the condition is fulfilled that this curve is bending on the downside, only then we will go in for a fresh short selling opportunity. And then the stop loss, as I said, is going to be equal to the target price, and both these will be dependent on the hourly ATR. So whatever is the volatility uh, in recent hours, it will be reflected in the target price and the stop loss levels. So let us now go back to our Visual J Forex platform. Here we have already done the instrument subscription. The Euro USD is our instrument of choice for today's setup. Then we define the position amount at 0. Then we got in the TRIX values, the hourly blocks here, shift 1 and shift 4, to look back on the hourly time frame to make sure that TRIX values are falling for our sell trade, and when the values are rising and beyond 0, then the algorithm will be going in for a buy trade. Now we focus on the short sell side for today's setup. Then we got these TRIX values defined at 5 minutes time frame for time period of 30 each, and then this will be compared with each other to come at a desired entry point for our instrument. We got the historical candles as well. We will be comparing the, this is actually to pinpoint the precise entry and exit point. So we will be comparing this 10 seconds candle closing levels to the closing level of this 5 minutes candle, and then we will be initiating the market open. This ATR block is for the defining of the stop loss and the target price. Here we are going in with the type conversion factor TCF to get this value, double values converted into the integer format. So we are multiplying it by 10 raised to the power 4. These are the if conditions, and here we had defined that our TRIX value should be rising and above 0. Then we got these 5 minutes conditions. All the 5 minutes value should be in negative territory, and then it should start to bend on the upside. As and when the TRIX curve will start to bend on the upside, and the value starts to rise, we will be going in for a buy trade. So, and here is the precise entry and exit points. So that's for the buy side, and now is the time to start working on the short sell side. So first thing first, we will need to look at the hourly values here, and once the hourly conditions are in place, we can go in for a fresh short selling opportunity as and when there is some correction, and then again the reversal on the 5 minutes time frame. So here we are going to need to make sure that the hourly TRIX value is falling and it is below 0. So we take TRIX 16 and TRIX 17, and both these values should be less than 0. So here it comes. It should be first input is less than second input. Here also first input is less than second input. Now the TRIX value 1 hour back should be the should be lower than the TRIX value 4 hours back. So we take this TRIX 16 here and then we compare it to TRIX 17, and this should be also falling. That means TRIX 16 is less than TRIX 17. So here first input is less than the second input. Now we have defined the hourly conditions. Let us connect these blocks. So here and this one is connected. So we got the color coded flow going. Now is the time to shift our attention to the TRIX values of 5-minute candles, and here we will be comparing the TRIX 18. Let us take 3 if conditions at once and define the requirement that all these TRIX values should be above 0. That means there was a fair bit of correction. So here, okay, TRIX 18, TRIX 19 and TRIX 20. 0, 0 and 0. It should be less, it should be less. Okay, now again we connect this to new condition. It should be less. Oops, I think here I had overlooked this. This condition is actually needed to be reversed. Sorry, pardon me for the error of omission. Now we got this. That means on lower time frame, the TRIX indicator is showing that underlying instrument has shown fair bit correction. It has shown some retracement and gone on the higher side, and then as and when it starts to again reverse back, we will be in a position to go for a fresh trade. So let us connect this. Now we have to compare the TRIX values, and the requirement is that TRIX 4 should have been greater than TRIX 19 with shift value 4, that is look back period 4, should have been greater than TRIX value with shift value 7, and here that means TRIX 19 should be greater than TRIX 20, TRIX 19 first input greater than second input, and then it starts to fall again. So we again look at TRIX 18, and then that value should be less than TRIX 19, means the curve is bending on the downside, so it should be less. Now the question arises, when should the entry happen? So for that purpose we are bringing in these historical candles of 5 minutes and 10 seconds each. So we take the last 5 minutes candle closing value, and as and when the price starts to rise beyond it, we will be going in for a fresh trade. So we now need candle 21's closing level, and we are going to need 2 if blocks for that, and then the open at market condition. So here we will need to take candle 21 closing level in both the blocks, and then we need to look at candle 22 and candle 24's closing levels. When the price starts to rise beyond the candle 21's close, we want the trading to happen. That means the candle with the shift 1 value should be greater, whereas the candle with the shift 2 value should have been less than the candle 21's closing level. So we put in those conditions, and here we take candle 24's closing, and it should be candle 24's closing level should have been now let us go back on chart and see when we want to place our sell trade, and then we will compare the closing values accordingly. So here the curve, it should go on the downside. Oops, I think I had made a bit of error there, and now okay, so our short sell will happen when the 10 seconds candles value is actually falling. So let us see, as the TRIX value starts to fall, so somewhere here, if the condition is fulfilled, 1, 2 and 3. Okay, so here the time is 3:35, and we will be going in for a sell trade for new trade when the value starts to fall. That means the 10-second candle close with shift 2 should be greater, and the 10 seconds candle with shift 1 value should be less. Okay, so we have to make some changes, and that means candle 24's closing level was greater than the candle 21's closing level. It should be greater, and then the candle 22, which is the 10-second candle with shift value 1, it should be less than the candle 22's closing level. So we take candle 22, candle 22's closing level is here, and now it should be less than the candle 21's closing level. So we have the final setup now, almost done. Let us arrange this, and then we have to fill in the market open values, and we are almost done. So I hope you have got a fair bit of idea of what we are trying to achieve with this setup. We want to trade with the trend, and then on the shorter time frame decent correction should have happened, and when the value again starts to fall further down, we want the new trading to happen. So we have got these TRIX values of 5 minutes candle, and then here we now we have to fill in default instrument, trade amount. We generally go with a 0.1 million lot size. The slippage 2 pips is good enough. And for stop loss and take profit, we have done the calculation, so we will be using it straight away. So we got this, and our stop loss and target is in the ratio of 1:1, so same value. And now we will do the testing to see how it will perform. During the testing, I think there is because of the intensive requirement of the CPU, the audio might lose clarity, but we will test it for a minute or two only, and I hope we will be able to get the test data for at least a couple of days. So let's see. We save the file. We started working on it on 28th of May. That's why the file name is 28th May. And we export the file, and we will then import it back in the Visual JForex trading platform. And there we will do the testing. So here we save the file as a Java file, and algorithms 20, and now we will need to create a new folder as the new month has started, which is June. 20, and oh there we save this one. Okay, and now we need to import that same file here. Take and it is in algorithm folder 2020 of June 20. This is the file. So we got this, and the code, let me see how long it is. Not much long, less than 1000 lines, and we can expect it to be a bit fast while testing. So we first need to do is compile it. Okay, compilation successful. Now let us test it for last week to see what kind of trading might have happened if we were to run it on our live account. So we do the test. It's all good. Previous week, instrument is 0 USD, fine. Account size is also fine. So we don't need to be bothered about these default presets. We have defined all the values as per our requirements there. So here there might be some issues with this audio now. So let us please bear with me for a minute or two. Here one trade has happened. Now 2, 3 trades happened. So we got the test results here, and we have made decent amount of money. With going with a lot size of 0.1 million, we made 850 USD in profit in last week. But of course, it is not representative of every week. And last week, it might even turn out was too good. So you should better test it for long enough time. But as you can see, our algorithm is working well in identifying and trading with the trend, and it's basically helping us to trade with the trend. So that's the basic idea behind developing this algorithm, and we have succeeded to some extent. So that's it for today's session. If you have any idea or any comment to share, any thoughts to share, you can write it in comment section, and I would be more than happy to take the discussion forward. So I will be signing off now. We will be back tomorrow with a fresh setup. See you tomorrow. Goodbye.